702.
The Clement Manyathela Show.
Let's walk the talk.
Right, it's 23 minutes now before 11 o'clock, and this conversation is brought to you by Nedbank CIB. Nedbank is a licensed FSP and registered credit provider. As I said to you earlier on, we're going to have a conversation about infrastructure, and we do need to talk about infrastructure development, infrastructure investment, and partnerships, right, and how critical those are for the growth of our economy. Infrastructure is the heartbeat of any thriving economy. In fact, it lays the foundation for robust economic growth and development. So it's pivotal in bringing trade supply chains, in facilitating seamless goods and services movements across borders. So it is central to Africa's growth, and we have to ensure that infrastructure continues to become the pathway and backbone to a thriving economy, so that it continues to serve as a critical catalyst for economic growth, for job creation and social equity across the continent. So please help me welcome Molebo Mothibe, who's the head of infrastructure finance at Nedbank, corporate and investment banking, joining us on the line. Molebo, thank you so much for your time. Good morning.
Good morning, Clement, and good morning to your listeners. Thank you for the time.
We also have Matias Cardarelli, who is the CEO of PPC Africa. Matias, thank you so much for also joining this conversation. Hi.
Good morning, and thank you very much for having us.
Yeah, Molebo, let me start with you and maybe have a conversation about infrastructure and how central it is now to economic growth rather than a policy debate.
Absolutely, Clement. It's definitely, as you said, central to economic growth and not just a debate. I think really for us at Nedbank, we see it as a driver for economic outcomes. So, you and I know that when energy is unreliable, when you don't have logistics chains, investment decisions get delayed, and actually manufacturing output weakens and exports lose competitiveness. So it's not just a theory. In 2025 at Nedbank, we've seen how capital allocation decisions are being shaped by infrastructure performance, and we're encouraged by the legislative reforms which support the crowding in of private sector investment in infrastructure. Following what we've seen in energy and Eskom, we're really excited about the announcements that government has made around transport and Transnet. And we actually really believe that we, as South Africa, and potentially the continent, are on the cusp of the largest rail reform program of the century, which is really aimed at revitalizing the transport and logistics sector.
And of course, as South Africa, I mean, we've been talking about infrastructure for years. What makes this time specifically and genuinely different?
Well, I mean, I think that I should have actually mentioned this in the first, in my first response. I think for the benefit of the listeners, it's really quite important to kind of explain how broad infrastructure is. It covers energy, it covers transport, that's road, rail, and ports. It covers digital infrastructure, so your undersea cables, your data centers, and water, which I think you and I are acutely aware of in terms of what we see in the country. What makes it really critical now is that I think we've seen really weak growth hovering at around 1% for quite a while now. And this is despite, a couple of interventions that government has made. We've seen a significant amount of private power generation capacity coming on board. And yet still, growth remains really challenging. So we really believe that the unlock lies in the other the infrastructure subsectors that I've just mentioned. So for us, we've seen behavior change in government in terms of really plans being translated into real targets being set. We've seen from a business perspective how our pipelines are changing. So we've seen a lot of bankable energy projects in the past, but in the last part of last year, as a business, we've seen a lot of transactions come to market around logistics, around rail, around water, which is really, really for us giving us comfort that we passed conversations. Really now, action is being taken, and we're seeing that in our business.
Yeah. Matias, let's talk about PPC now, because you can't really talk about infrastructure development and you ignore PPC, because after 2 years of stabilizing the business, you've now decided now this is the right time to invest in a new cement plant, for instance, in the Western Cape. What convinced PPC that this is the right time to do that?
Yeah, first of all, I would say that the confidence is coming internally. As you have just mentioned, I mean, we have been pretty successful in executing our turnaround plan that we call Awaken the Giant for the past 2 years. We have been able to stabilize our operation and to put back PPC into a growth path. Western Cape is a very important market for us. Currently, we are running 2 old cement plants in the region, 40 and 60 years old. So the construction of a new plant in the Western Cape was a natural project for PPC. But also we are starting to see some signals of recovery in the construction sector. South Africa has been through a negative construction cycle for more than 10 years, and we are starting to see things turning around. So as a cement company, of course, as you mentioned, cement is pivotal for any infrastructure development in the country. We need to prepare our quality cement to all the markets that eventually will need it.
Yeah. And this plant replaces, in my understanding, 2 older facilities. What does that modernization mean for PPC's efficiency, competitiveness, and reliability?
Of course. I mean, this is going to be a game changer for PPC. It changed completely the way we are going to produce cement. It is going to bring a ton of efficiencies that is going to allow us to produce more cement, high quality cement, and overall is going to reduce heavily our cost. We are expecting to produce with 30% less variable cost and 35% less fixed cost. And on top of that, what is very important for us is going to reduce our CO2 emissions significantly. We are looking at 30% reduction in our thermal consumption, 25% reduction in our electrical consumption. We are going to lower our usage of coal, and bottom line, we are reduce our CO2 emissions. So it's a completely game changer. For you to give you some background, PPC is already running the most modern plant in South Africa. With this new plant in the Western Cape, we are going to run the 2 most modern plants in the country, and this new plant in the Western Cape is going to be the most modern and efficient plant in the continent.
Molebo, I mean, we often talk about Africa's infrastructure gap, and we often frame it in big numbers, but what does it actually mean in practical economic terms?
Sure. Clement, it's quite a daunting number, first of all, in terms of the infrastructure gap. Depending on your source, it's typically measured in the billions of US dollars. Some numbers have been mentioned at or around 150 billion US dollars a year, which is quite significant, right? And as you mentioned in your introduction, infrastructure is a key driver of economic growth, of productivity, of trade, and attracting investment across multiple sectors. And really what happens is that when you have that gap, you actually have a cap on economic potential. And the unfortunate thing also is that according to the World Bank as well, transport and logistics costs in Africa are among the highest in the world, right? And really what that translates to, again, practically is fragmented supply chains, higher logistics costs, compromised market access, and actually our ability to really industrially scale as a continent. It also affects, competitiveness, limiting intra-African trade, again, a cost again to our growth potential as a continent. Now, at Nedbank CIB as a business, we see this as a really good opportunity for us to apply our deep sector expertise across the continent. Remember, our infrastructure ambitions are not just South Africa, but it's actually across the continent. And that's why we would partner with a client like PPC, for example, who's also got a sub-Saharan footprint. But we go beyond sub-Sahara. We really follow our clients and our sector expertise. We're always looking for opportunities to structure and finance infrastructure projects because we recognize the positive economic impact that infrastructure has, particularly on regional integration, export growth, and ultimately GDP growth for the continent. So it's not a peripheral or a development issue for us. It's really fundamental. It determines how we can industrialize economies, we can compete globally, not just as a country, but as a continent, and really generate employment at scale.
Yeah. Let's talk about private capital now, because, I mean, it's available, but it's increasingly selective. You know, it flows normally to well-prepared and bankable projects. Why does Nedbank CIB still see infrastructure as investable?
As you mentioned, private capital is cautious, right? It's always looking for long-term assets that have predictable demand, but clear economic returns. We have shareholders, Clement, you know, and we've got targets that we've got to achieve. But also for us as Nedbank, we see infrastructure as offering exactly that when projects are well prepared, right? They create favorable conditions for business, making them attractive for investment, and also, not to mention, as you mentioned earlier, job creation and economic growth. And for us, it aligns with our purpose as Nedbank, which is really to use our financial expertise to do good for societies, for the individuals, and the environments that we operate in. And we really are a business that believes in investing in sustainable businesses. So for us, in 2025, our experience has been that capital has actually not withdrawn from infrastructure. It's just more selective, as you mentioned. In our business, advisory, structuring, and infrastructure resilient linked transactions have been resilient in our businesses. And even though, you know, broader investment sentiment has been subdued, we are seeing activity. The constraint, as you mentioned, is not the availability of capital. It is really the availability of quality projects where the risk allocation is well thought through and there's sufficient execution capability. If those fundamentals are in place, there is more than enough capital, not just locally, but globally, which is ready and waiting to invest in infrastructure projects.
Matias, cement is, of course, energy intensive. You could argue that it's exposed to volatile costs as well. How does the new plant improve PPC's energy resilience and cost control?
Well, that is a very important question. I mean, the new integrated cement plant will fundamentally transform PPC energy footprint, and as I already mentioned, our cost structure. The new plant will allow us full flexibility in our product mix, and is going to reduce, as I mentioned, the variable cost and the fixed cost. So a lower energy consumption that is going to come through alternative fuel. The new plant is going to be able to produce using alternative fuel instead of coal, and also the plant will have their own solar facility. So we are looking at approximately a 20% replacement by alternative fuel from fossil fuels, combined also with using less electricity, which actually is going to reduce the coal that, for example, Eskom consume to provide that electricity. So this is going to be, as I mentioned, a state-of-the-art plant in terms of energy consumption, and is going to impact ultimately our CO2 emissions too.
And what do you think this is the turning point? Because, I mean, it's 130 years now in South Africa. Where does this investment sit in PPC's long-term journey?
Well, I think we have a 130 years history. We have always been the leading cement company in the country. This new plant is going to strengthen our competitiveness in the country. So we are looking for another 130 years leadership in the cement industry in the country, and in our region.
Molebo, what role does Nedbank CIB play in enabling infrastructure delivery as an economic outlook for South Africa and the continent?
Clement, we see ourselves as a channel and as a catalyst. Our role is really grounded on partnership with key stakeholders to convert infrastructure investment intent into bankable delivery. So what does that mean practically, right? What it means is that we are always striving to keep abreast of policy developments. So that's why I spoke earlier about the reforms. We watch that very closely. We leverage our deep sector expertise to structure projects so that risk can be appropriately allocated, cash flows that are aligned to asset lives, so that long-term capital can be mobilized. Remember, for us, it is about creating bankable transactions, not just for Nedbank, but for the market, because we really believe in how it is that that's how it is that you're going to crowd in the right level of investment in infrastructure. Our strength for us is around looking at transactions holistically, so that we look at traditional lending, innovative risk management mechanisms. So that's around, for example, your hedging from an interest rate perspective. We use instruments like guarantees, trade finance, export credit, insurance, and PPPs to really design transactions that attract international and local investors while managing risk and ensuring that projects are not just bankable but are sustainable. Remember, that's also really a key part of what our purpose is as a bank. I mentioned earlier on that we saw different projects across the infrastructure subsectors coming to market, and we really believe that as a bank we are positioned at the intersection of a macro need and capital deployment. Because for us, when infrastructure is properly structured and financed, it supports competitiveness, it unlocks industrial investment, and it restores confidence. And for us at Nedbank CIB, that is the economic outlook as we move into 2026.
Yeah, and is that why, as because someone was asking earlier on, in fact, on our WhatsApp line, why as Nedbank this is a strategic focus for you? Are you able to expand on that?
Why is it a strategic focus for us?
Yeah, this issue of infrastructure.
Because we are a bank that is located in a country.
Mm-hmm.
We are not located in isolation. So if South Africa does not work, Nedbank does not work. Okay, and also we are a bank that is driven by impact. One of the most, so Clement, when you have load shedding, you feel it immediately because the lights are off. When infrastructure doesn't work, it's a bit of a long-term impact, right? Because you start seeing it over time with loss of jobs, because the ports are not functioning well, the mines are not able to export, and so jobs are at risk in the mines. You see it in terms of road traffic, transport, the trains not working. So for us, Nedbank is focused on infrastructure because we are an impact bank. We are a sustainable bank. We cannot be a successful bank if South Africa is not successful, because that is not sustainable.
Absolutely. Matias, what does this investment say about PPC's confidence in South Africa's industrial future?
I think it speaks big time about our confidence in the country. As I mentioned to you, and Molebo also has highlighted this, South Africa has been in a very negative cycle for more than 10 years. But as a cement global executive, I have seen these cycles in other countries as well. We can mention Russia, we can mention Brazil, we can mention Egypt, big cement market that went through very negative cycles. But all those cycles eventually came to an end. South Africa needs infrastructure. There is a population growth. There is an urbanization growth. The country needs infrastructure. We strongly believe that the government understands that if you want to push unemployment rate down in South Africa, you need the construction sector, and we need infrastructure back. So I think that we are working jointly with the government. I think it's very important the partnership between the private sector and the public sector. I think it's very important the partnership between industrial companies like us with financial institutions like Nedbank to turn this very negative cycle around. We believe that cycle is coming to an end. As the leading cement company in the country, we are preparing ourselves for a different scenario in the years to come, and to be ready to support the country in a much positive construction infrastructure cycle moving forward.
Matias Cardarelli, CEO of PPC South Africa, thank you so much for making time for us. Molebo Mothibe as well, I appreciate your time. She's the head of infrastructure finance at Nedbank CIB, and I think that just goes to show how important these partnerships are as we continue to push for more infrastructure investment and infrastructure development. Like the president used to say, hey, we have to turn this country into a construction site. This conversation was proudly brought to you by Nedbank CIB. Nedbank is a licensed FSP and registered credit provider.